Well, higher prices and digital sales helped drive the gains for McDonald's in the first quarter. The fast food giant beat expectations on earnings, but the company was also weighed down by the toll stemming from the war in Ukraine. Let's bring in Yahoo Finance's Brooke DiPalma, who's tracking all the details for us. Brooke.
Akiko, that's right. It really was a combination of menu price increases, strong digital sales, and marketing promotions that fueled growth this past quarter for McDonald's. Now, taking a look at revenue, the company beat expectations, coming in at $5.67 billion, where adjusted earnings per share also beat, coming in at $2.28, both beating Wall Street estimates. But on the earnings call this morning, executives did note that menu prices are up, get this, Akiko, 8% compared to a year ago, but traffic only down roughly 1%, with customers choosing cheaper menu items or smaller orders. And those traffic levels are still higher than pre-pandemic levels. Now, the company is looking to ensure that with these price hikes, it's still providing the right value for its customers. And particularly, they're keeping a close eye on lower end customers as COVID-19 eras stick, both dining in restaurants and consuming more at home. But of course, Akiko, as you noted, that toll from Russia's war on Ukraine certainly hit the company hard. It cost them $127 million this past quarter, with roughly $100 million accounting for inventory and supply chain that will likely be disposed of, and $27 million in order to pay employee salaries, lease, and supplier payments. Now, executives did note that they're analyzing options for these locations in both Russia and Ukraine, with both remained closed. But they said that everything is on the table, and they hope to provide an update by the end of the second quarter.
And Brooke, we've seen McDonald's make significant investments in digital sales, especially throughout the course of the pandemic. Looks like they got a big payoff in the quarter.
That's right, Akiko. They did get a payoff here. Digital sales, including mobile apps, delivery, and kiosk sales, where they're just starting to bounce back as people make their way back to in-person dining, surpassed $5 billion this past quarter and made up of over 30% of total system-wide sales in McDonald's top 6 markets. Now, compared to a year ago, digital sales are up 60%. But, Akiko, it's important to note here that we're still waiting for active member uses, that number of just how many users are on their app, and loyalty members on their My McDonald's Award program that launched last July. They said this morning on the call that that gives great insight as to what the customer is eating, what they're buying, what they're purchasing. But those numbers and those exact details on just how many customers are staying as active reward members is still yet to be known. And Wall Street did also note that they're a bit weary here, that if McDonald's doesn't continue to invest in this major experience of the future and technology, McDonald's might lose momentum when it comes to sales and competitiveness in this ongoing fast food wars.
Yeah, and the competition only heating up, but it looks like shares of McDonald's, investors at least liking the numbers that came out today so far, with shares up in the session. Thanks, Brooke.